Hello, hello. Welcome back, everybody. We are back. You know, it's been almost 2 months since our last We Talk Money episode, this ending of season 1. So welcome back to season 2 of the We Talk Money Show. I got Travis, aka the Stock Geek. We got Nikki, certified financial planner, and yours truly, just a crypto nutbag, just swimming in Bitcoins over here. By the way, anybody watching this, my internet is really bad. I'm in the middle of the country right now. And we are working on the new studio setup, which is going to be really sweet. But for now, you guys are going to have to suffer through whatever video quality ends up coming through. So thanks for bearing with us and welcome back, guys. How are y'all doing?
Awesome.
Great. It's kind of funny that we didn't time this next season to start while Bitcoin's breaking through all-time highs and the stock market's breaking through all-time highs and all of that, but it's kind of lit out there. So it kind of works out. You know what I mean?
Yep. And Travis over there just growing out that long, luscious, beautiful hair.
That's right. Hey, I'm going to keep growing it as long as we keep hitting all-time highs. It's just going to keep getting longer.
Okay. So when we go into a bear market, are you going to shave your head then or what?
We'll see. Depends on how bad we get. Yeah.
Oh, man. Well, let's go ahead and just jump into everything. I know we've got a lot of questions that have come in. We've got a lot to cover in the markets. And Nick, do you want to just give a shout out to our sponsor before we get going?
Absolutely. Yeah. The show is sponsored by our friends at White Charts. People that follow my YouTube channel, which is As She Talks Finance on YouTube, see that I use White Charts a lot for content, for my stock research. And it's just become an everyday driver for me. I'm starting to wonder how I can ever live without it, but I really enjoy it. And if you're an active trader and you need to do research, it's a great place to go. So just go to whitecharts.com, tell them We Talk Money sent you, and they'll give you a discount, 15% off of your first subscription.
Sweet. All right. Well, with that said, let's go ahead and jump into the markets. Like I said, we've got a lot to cover. A lot has happened over the past couple of months. You know, obviously markets have been going nuts and hitting new all-time highs. We've had some awesome trades that obviously we haven't been able to talk about publicly because we've been traveling around and buying land and feeding cattle and whatever else we've been doing. But I think I'm even starting to develop a little bit of a Southern Texas drawl here. But let's just take a look at the markets and kind of context of where things are at here in Q4 of 2021. You know, crypto has had another banger year with Bitcoin and Ethereum and Solana and a lot of the majors up, you know, several hundred points, if not, 10x. And if we jump over to the stock market and just look at the stock indices, you can see the S&P and the NASDAQ and the Russell are up, well over 20%, pushing 25% on the year. Also oil, a lot of commodities are up. Obviously, lumber had a really big volatile move earlier in the year. What's driving this, guys? What do you make of prices and make of the markets, I guess, just from a 30,000 foot overview before we jump into the charts?
I give up. I don't know anymore.
There's this podcast with 3 guests on it. And at the beginning of the year, they said that, inflation might be an issue this year. And I can't remember who that was, but they seemed pretty smart. I think they were right about it. Certainly the inflationary backdrop has really helped almost all asset classes this year, particularly ones seen as inflation hedges like some stocks and crypto and commodities. So those have ripped partly, at least because of inflation. I think also we've just seen a really strong risk on environment for most of the year. Speaking specifically to stocks where, I spend most of my time, we've barely had like a 5% correction. I think we had maybe a 4 or 5% correction in the indices starting around September when people were worried about Evergrande. And, even though that risk is still hanging out there, people kind of moved on from it. And then we had the Fed kind of taking its baby steps. And so no one's really concerned about what the Fed is doing, at least from, trying to kill the recovery too quickly standpoint. Obviously, we can talk about how, their decisions longer term might be an issue from an inflationary perspective. But as far as, being risk on in markets, we have had a great backdrop for it. And that has obviously helped lift all boats for the most part. We're in the middle of earnings season right now. We've had massive moves in large caps, both up and down. It's been a really great time to make money this year. We even have SPACs coming back. We've had some interesting trades there. And yeah, I think it's a fun environment. And as we move through the end of the year, I mean, it doesn't look like there's a whole lot of barriers to continuing the party.
I mean, the fact of the matter is that, the fact of the matter is that there's still no place to get yield too, and even if the Fed is going to start raising rates next year, I think the market doesn't believe that they're going to get high enough to where there's still that, high enough to where they could move into bonds or less, risky assets. So I feel like there's still going to be that need, even when the Fed starts to raise rates for that risk on an asset. So I think that's another thing too. The market just doesn't care. It just wants to earn something. And, earnings have been, Trav, correct me if I'm wrong, but from my vantage point, earnings looked pretty decent. There's still earnings, at least, even though there are some headwinds for sure, with the supply chain and the labor shortage and, costs are going up, et cetera. But earnings for the most part looked pretty decent. So that's kind of also supporting it.
That's right. Yeah.
And I guess to that narrative of, just the inflation play, this is why we're seeing a lot of people piling into Bitcoin and a lot of other crypto projects as well. But I know we've got a delay on the audio. So Trav, go ahead. I didn't want to cut you off there.
Oh, not at all. No, I was just going to agree with Nikki's point, and earnings have been pretty strong. There's been some misses. I mean, I will say this, if you miss your earnings, your stock's getting whacked pretty hard here in Q3 earnings season. So you better make your earnings or you might be Peloton down, 50% after several trading sessions. So there is some issues there with corporate margins. Certainly if you have any physical goods that you're selling, you've got some concerns around shipping costs, around labor costs, around lots of, commodity input costs rising. And so we've seen a lot of comments on earnings calls about companies starting to think about that. And, where that gets a little bit dicey for me is we've talked about earlier in the year how inflation can beget more inflation, just as people and businesses start to plan for future inflation and start to raise prices, and it becomes a self-perpetuating cycle. So I'm a little bit concerned about corporate margins as we go into 2022. But, the expectations for S&P 500 companies' earnings is still for a pretty healthy increase next year, going into next year as well. So, while earnings have been pretty good, I think you have to start being careful about where you pick your spots, because if inflation continues to be a problem and even accelerate, and then you also have continued cost pressures and supply chain issues that probably don't get worked out in the near term, then, some of those businesses are going to get hit by thinner margins and declining earnings. So yeah, it's while we say that it's risk on right now, I think we always want to have an eye to this idea that you want to be thinking about selling greed and buying fear. And we're getting more towards the selling greed phase of markets.
Mm-hmm.
Yeah,
I know that.
It is interesting too, looking at the inflation rate, how it's just kind of, after things really started to heat up in the first half of the year, at least the official data, inflation is maintaining kind of a higher level. So it's not this transitory like pop and flop inflation rate that we were, or a lot of people were saying that they were going to expect. And I think you guys were more on the higher inflation for a sustained period of time camp, right?
Yeah. I know that we had different viewpoints. I think Trav, you anticipated a little bit higher sustained inflation than I did. I was thinking somewhere in between that 2 and 3% for the longer term. That's probably higher on the higher end towards 3. And I think you were thinking a little bit higher than that even.
Yeah, absolutely. I just see what happened structurally post-COVID. You've had a lot of early retirements, especially in blue collar workforce areas. And, you have a whole ESG movement that's trying to stop oil production everywhere, right? And so you have significant input commodities like crude oil, which flows into so many other products, right? Plastics and transportation fuels, et cetera. And so, if you have a global movement to actually curtail production, then you're obviously going to get higher prices like we've seen this year. So, that is more structural if that continues. And of course, the labor issues, probably get fixed to some extent from higher wages, but that just means, we go to higher levels of inflation before the problem kind of gets fixed. So yeah, I think the structural issues are still there. The Fed's still, being very dovish. And so they're not worried about letting inflation run hot for a little while. And, if you want to go buy bonds and lock up your money for 30 years, you can do it for less than 2%, but that's not what I want to do.
Nobody does.
Yeah. And, I'm going to pull things back to my favorite market, which is Bitcoin. And I think the narrative has definitely spilled into the mainstream, as we have been calling for many, many years. And, it's just been interesting to see the developments that have happened just over the past couple of months. ETFs coming down the pipe and launching, sovereign governments really just going hardcore. You're also seeing a lot of individual politicians in the US stepping up and either taking salaries in Bitcoin or trying to compete. The new mayor of New York and the mayor of Miami, they see the writing on the wall and they are competing for the talent and the capital flow that is just booming into the crypto space right now. So you've got some smart kind of local places within the US, but we've also got some major risks. In the infrastructure bill, there's some really concerning things that are looking like they're going to be included. And there's some people at the high level federal government in the US that are taking some anti-crypto stances. So I don't know. There is a lot of risk there, but if you just follow the capital flow and look at the chart, I always say like price charts are truth, and you can see the reality behind the story and what's happening. And the reality is that people are waking up to, you can print infinite dollars and hard money doesn't really exist. Well, now we have Bitcoin, and, it's just interesting seeing that narrative just continue to get deeper and deeper roots, not just in the US, but all over the world.
Yeah, it's a movement. I think I've had some interesting conversations over the past couple of months in the traditional finance community about crypto. And, there's still a surprisingly large cohort of classically trained finance people who still believe that crypto is as a whole asset class. They still believe that there's nothing of utility, that it's a total, Ponzi scheme, et cetera. And I have to tell those people, like, if you're looking at a $2+ trillion asset class and calling it a Ponzi, there's something wrong with your analysis. You've got to go dig deeper, and you've got to go really look and understand why so many people globally, so many firms globally now think this is a big deal. And so, of course, crypto hasn't necessarily lived up to all of its promises, but the internet didn't live up to all its promises in the first 5 years, right? So, I think, if you're ignoring what is now a $2+ trillion asset class and you still think it's going to go to zero from here, I think you've got a lot of homework you need to go do.
Yes.
Mm-hmm.
Bias is a killer.
Yeah,
absolutely.
Yeah. It's very split too in the financial advisor space. I'm seeing a lot of debating right now over this. I'm seeing groups, financial advisors and planners that are coming together. They're literally banding together and doing study groups for crypto to try to help learn it a little bit, help each other learn it better so that they can advise clients on it, because they're like, okay, this is here. This is a new asset class that's going to stay, and they're there. And then there's this other side that's like, you guys are nuts. You're stupid for even suggesting putting client money in crypto. So I'm even seeing that big time, that bifurcation happening in that space.
Yeah. The people that hold out the longest are going to be the ones that have to buy at higher prices. So, we need those people to be stubborn.
That's right. Yeah. And we've got to give Nikki credit. She's been an early adopter in the CFP, the Certified Financial Planner community of, being an advocate for crypto and the asset class. And I don't know how you look at the performance numbers over the past decade in crypto, and, you have all this demand from your own customers, right? Your own, people that you're managing money for. I don't know how you look at all those things and you have your customers asking for it, and then you still would take, an anti-crypto stance. It seems bizarre to me, especially if you're a data-driven person, right?
Well, there's an article
absolutely.
There's an article in the Drive doc actually that talks about this, that millennials are shunning financial advisors completely because they're just so out of touch. They're not hip with it, so to speak. And they don't want regular market returns, right? They have come into a completely different world now, and they've seen an asset that has absolutely blown away the S&P 500 in terms of, returns. And they want that now. And, whether that's good or bad, that's, whatever, but it is what it is. And so I think that that conversation just kind of flew into that topic. So I figured I'd bring it up because I do know that a lot of younger people, especially millennials and Gen Z, they don't want financial advisors touching their money at this point because they're just too out of touch with it.
Yep. That's a good point. All right, let's do this. Let's jump into some charts. Let's do some TA. Let's talk about also like what trades we've been making recently and what our thoughts are. And then I've got a bunch of questions that we got in today from a lot of folks that responded on Twitter and YouTube. And so we'll definitely get to that. But yeah, let's just pull up the Bitcoin chart. I know everybody's like, what are your targets? What do you think is going to happen? That's always the number one question. So to give a little bit of context, for anybody that doesn't know, we'll just kind of zoom out and talk about what our thesis was in 2020, what we did, and where we are today, and what I think is going to happen next. And the first thing is, in March 2020, we had the COVID panic, right? Bitcoin fell from like 8 or 9K down into the 3K zone very briefly. And in hindsight, that looks like a great time to buy. And it was. And we bought the hell out of this dip. And then we built into a significant long position all through the 7K, all the way up to 12K. And the bull market really happened around 12K. This is where things got kicked off, right? And the market just ripped from, the 10K zone up to 60K. And then it had a pretty deep haircut, had a 50% pullback down to 30K. And then as you can see over the past few months has had a very fast recovery and is recently, as of yesterday and today, tagged a new all-time high. Now, the way that I personally have traded this is I got real heavy in the 10K and then scaled out along the way, all the way up until the 60Ks. And then I did not buy the 30K bounce, but what I did is I started to build in as we got back up above the moving averages and we're pulling back. We had a high probability area of support. And this was kind of confirmation that the bull market was back on, right? When you're below the moving averages, when you're making lower lows and lower highs, and you're kind of mid-range, yeah, you can build into a position. But what I like to do is have the timing be a little bit better. And I'll do what I call paying for confirmation. So I don't mind buying at higher prices if the probability of continuation is greater, right? So that's really what I've been doing, is just over the past couple of months built in around the 50K zone again. And here we are back up around all-time highs. We've also had some awesome trades in some of the other majors like Ethereum. I basically took a lot of profit back in May after buying in the 300 all the way up to like the 1200 zone, took a lot of profit, and then recently started buying back in Ethereum as well. I've got a few possibilities that we've been outlining for the wealth building community. And this is the way that I think about price action. I look at possibilities, which are everything that could happen. And then I try to weigh probabilities, what I think is most likely to happen. And then I come up with a plan for each scenario, right? So as I started building back into a long position in ETH, I start to think about the different risk management scenarios that could go along with each possible outcome. We've also started to see some awesome setups in things like Solana. There have just been some really textbook like breakout setups, which when I say a textbook setup, that doesn't mean that it's guaranteed to work, right? There's always a probability and a portion of setups that even if they're higher probability, they will fail, right? So I don't know if Solana continues to go up from here, but I am long. I bought the breakout. And I have a risk management plan there. And I've really just been trend riding a lot of other alts. I haven't initiated a whole lot of new positions recently, but I am preparing for that. If Bitcoin's going to make a march towards 100K or 120K over the next few months, I think if we have a second bull market, we're going to see many more trade setups and opportunities in a bunch of different altcoins. And I think that would lead to kind of a parabolic blow off top, just like we've seen in every prior market cycle. And this is something we were talking about earlier in the year. Was in Q4, we were preparing for Q4 to be that kind of parabolic move time zone. So as of today, things are still lining up with that thesis, and everything that we've been kind of planning for over the past year has come to fruition. So we'll see what happens from here. And obviously there's no guarantees that has to play out, but I'm heavy long again, man.
Love it. So are you, you're long like 5 billion worth of Shiba Inu, right? You're the guy who had the 8K to 5 billion.
Definitely no, that was not me. That would, yeah. But yeah, congrats to, it's amazing how some of these projects can just have massive growth that just doesn't seem in the spectrum of rationality or reality. But that just shows you why I always say don't underestimate what crypto projects can do, because there's so much money, there's so much capital flow into this space right now that the wildest things happen. And so the warning there is that you don't want to get starry-eyed and take unnecessary risk and just start chasing things that could be like pump and dump patterns. So you want to make sure that you're getting in early, you're managing risk and all those things. But, there have been opportunities this year where people have made life-changing amounts of money on single plays like that. It's just wild.
It was just a meme, right? Just another Doge type thing, right? Or am I missing something?
That's the thing. Most alts are that, right? Like they're either copycats or they're variations that really don't have long-lasting value. And a lot of them are just speculative bubbles, right? We've seen that since the early days in altcoins. Back in 2013 and 14, there weren't that many. 2016 and 17 was really the first year that we saw like a mass rising of all these projects. And a lot of them have died off from this market cycle. Like they don't exist anymore. And then there's others that have recovered and made new all-time highs. So some of them will survive. What I typically do, like my strategy though, I tend to lean into projects and coins that are new to this market cycle, right? Like even a lot of the older coins that I think are quality, you've got Tezos, you've got, Zcash, Monero, stuff like this. It's really failed to keep up with Bitcoin's gains, right? We had a really good trade on this in the first half of the year, but you can see, over the past few months, they've been lagging where stuff like Solana and ETH have been making new all-time highs and really just capturing a lot of that new capital flow, right? Like when you're looking at projects, one thing to think about is, okay, well, what are the masses going to want to get into? What's the popular narrative, right? With the metaverse, with Web3, with DeFi, with NFTs, right? That's kind of the flavor of the year for 2020 and 2021. Not so much competing networks and, some of the stuff from 2017, some of that is still surviving, but every market cycle, there's a new narrative, there's a new, flavor. And you've got to stay on top of what those are, like NFT and like gaming, like Axie, like this is one of the best performing ones of the year, AXS. You've got a lot of stuff that is taking that new capital flow and attracting it where some of the other coins are like leftovers, right? And they're just going to underperform.
Yeah, well said. It is nice to see there are some really healthy parts of this cycle in addition to, you've got the Shibas and the Dojas, of course, but you do have like some healthy speculation projects like Solana. You mentioned Axie. Obviously, those things have, at least some real utility. Solana, very probably the biggest success story that I've seen as a more casual observer from the outside looking in, focused on transaction throughput, focusing on being a blockchain that actually scales and can provide some of the longer term like utility applications and smart contracts, things like that. And then you have the price obviously responding in a just phenomenal way. That's one you'd almost like to rewind back a year and have had done work on that when it was $3 or $4. And
that's how that works, man. You've got to be early if you want to accumulate, right?
Yep.
You can trade it on the way up, but the biggest gains are identifying those early and allocating some capital. And, there's no right or wrong way to do it because whenever we look at the leaderboard here, you see all this green, right? You see the ones that have made a lot of money, but what you don't see here are the ones that have died or the ones that have dropped 99%, right? So we've got to keep that in mind too, that there is a little bit of survivorship bias in crypto, just like the stock market too, right? So if you think you're going to take like 100% of your capital and put it into one project and, make 10,000%, sure, that might happen. But I always say, and I actually tweeted this the other day, I think this is probably worth mentioning because I've seen a lot of people making the kind of the same mistakes that I've seen over the past 8 or 9 years that I've been in this. I said, the worst thing an investor can do is wallow in regret, right? Calculating missed opportunities or woulda, coulda, shouldas, right? I should have bought that coin. I should have gone in and bought Shiba when it was nothing, right? I should have gone into Solana. I should have just taken that money I needed for groceries and leveraged it up as big as I could and bought this cheap coin, right? But like hindsight's always 2020. And if you do that, you're going to beat yourself up and you're going to probably get overly aggressive the next time and actually lose. So just for anybody that's looking at everybody, again, who's getting fabulously rich in this market cycle, if you haven't achieved your financial goals, keep this in mind. It's really important. Look forward and realize that there's always another opportunity right around the corner, as long as you don't do something stupid that takes you out of the game permanently, right? That's the one thing, is just don't do anything that could take you out of the game where you're going to lose all your money on one play. You rolled the dice, you went red or black, you chose black and it hit red, right? You don't want to do that kind of stuff.
Very well said.
Snaps.
Very well said.
Snaps for that. Yeah. Perfect.
Yeah. So that's basically crypto land. There's obviously a ton of news that we can get caught up on. There's a lot of developments. I've been spending a lot of time with cattle and planting trees and taking a lot of my like digital profits and putting it into the physical world over the past couple of months. So it's been nice to take that break and mentally clear some space out. But over the next few shows, we can get everybody caught up on the latest developments, what's happening with, the metaverse, the NFT space. I have so many opinions and so many things that we just want to dive into on that. But for the sake of time, let's talk about on the stock side, because I know you guys have had some bangers as well. What are some of the big themes? Where do you guys see big opportunity? What are some of the plays that you guys have had? Maybe lessons learned? Let's go through some of that.
Yeah, so it's been a fun fall time frame. It's funny because I put on hedges, or I kept on my hedges over the summer and through the fall, and they've been a headwind. But as sort of hoped for. What we've done is been able to like way outperform given some of the positions that we had on. And so that's the idea, is like, even if you can protect yourself with a hedge, you can also have your long portfolio that can do really well in this type of market environment. So we've had some really interesting SPAC trades, both on the SPAC warrant side and in some individual SPACs like IonQ, Nextdoor, which now trades under Kind. We've had, I think there was one or two others. Obviously, Weed Maps and ChargePoint last year were two SPACs that we've done pretty phenomenally well on. But the SPAC market is kind of reawoken. And what I was looking at over the summer was ways to play the SPAC trade in ways that have very, very low downside and high upside. And so the SPAC warrant space is a really particularly interesting one, because we've had, I particularly have been spending a lot of work looking at pre-deal SPACs and looking at their warrants, which traded down in many cases below, $1 or even sometimes below 60 cents. And those warrants can have massive upside. I mean, in the most outlier case, you look at the Trump SPAC, which trades under DWAC, and those warrants went from 50 cents the day before the deal announcement to, I think at one point, $50 or $60 a warrant, or maybe it was $30 or $40 a warrant. And so you had, a 60 bagger essentially in 1 or 2 days. There's a host of other warrants. We nailed the trade in the Red Ball Acquisition Corp, RBAC, which is taking SeatGeek public. And, we bought those at 70, 75 cents. And today they're trading 180, 190. So, those are the types of trades where, if the world goes to hell again and, these SPACs can't get deals done, then you lose the capital that you put into the warrants. But on the upside, you've got, a very high likely potential for a multi-bagger investment. And so far, we've seen very few SPACs wind up without doing a deal. And so it's really strange. I mean, I believe that SPAC warrants generally are just underpriced as an asset class. And so we've been doing some work there and trying to get into these situations where we can buy at 60 or 70 cents with the potential to make, $2, $3, $4, $5+ on these warrants once a deal's announced. So that's been a really fun one. You put together a portfolio of these and you kind of diversify that risk of any one SPAC, having a busted deal or winding up. And I'm looking at the prospective returns, and I think the SPAC warrant portfolio could put up, 50% plus types of returns on the overall portfolio of warrants. So that's been really fun. And then we've ridden those SPACs like Nextdoor and IonQ up from the $10 SPAC price up to, $15 to $20. So those are great situations when you can buy with kind of little downside before the deal completes, and then with the potential to get a nice pop on deal completion. So especially if you're willing to hold some of those where you find the diamonds in the rough. There's a lot of crappy SPACs. We just saw Metro Mile, which was a Chamath, invested in the pipe of that SPAC at $10 a share. And less than a year later, that company's getting acquired for like 65% less than they had SPAC'd the company at initially. So you have some stinkers out there. But if you can really think through and look at the details of the business combinations, you can find opportunities to own interesting businesses. Nextdoor, I know, Nikki, you're a big fan of Sarah Fryer, the CEO there. And that's one that we hopped on as well, and has had a pretty quick rise since the deal completed. But longer term could be a multi-bagger if you think that they hit their goals over the next 5 years. So that's been a fun area to explore, because similar to crypto, maybe in the depths of 2020 or in 2018, the SPAC market went through a down cycle. Everybody hated SPACs, and some of that's for good reason, but the time to do the work was when everybody got out of the asset class. They had sold all the warrants down to 60, 70 cents a piece. And here we are now with the Trump SPAC reinvigorating the whole SPAC market, and you have SPACs popping off again. And so you just want to be doing that homework when, the markets, when everybody else has capitulated.
That's what I love about you, Travis. You're always looking for opportunity in new places where the mass majority of retail investors don't even know how to look at that stuff. Right. So for anybody that's listening going, what the hell are warrants? And what are you talking about? What's the explain like I'm five of how this situation would work?
Absolutely. Yeah. A SPAC warrant is basically like a 5-year option, a 5-year call option. So it allows most SPAC warrants are struck at 11.50. So it allows you to acquire shares at 11.50, but you have 5 years to do it after the deal completes. Now, if the SPAC doesn't do a deal in 2 years, those warrants can be worth zero. But, a 5-year option is a very valuable option. There's a lot of time value and optionality, because you could imagine a company that SPACs at, $10 over a 5-year time frame. If they grow a lot, that company could be worth $20, $30, $40, $50 a share, or even higher potentially. And so that 11.50 warrant becomes very, very valuable. You could buy, if the stock's trading at 50 and you can buy it for 11.50 via the warrant, obviously that warrant's going to trade for a high price because that's a very valuable option. So these SPAC warrants are essentially 5-year call options, and they provide a little bit of extra juice on top of the underlying SPAC itself.
Love it. Love it. Nick, what about you? What have you been focused on in the equities world?
Yeah, so I kind of went on a little bit of a hiatus, but I finally got back into the 10Qs and the S1s. And as you guys know, I'm a big retail investor, and there have been some pretty exciting retail IPOs, like which is the shoe company. Chris and I love their shoes. Allbirds. They make those warm.
What's on ticker?
Shoes. ON. Rent the Runway. There were a few others. So I've been spending some time going through a lot of those reports, and then I've also been diving into Nextdoor, which Sarah Fryer's the CEO. I think she's pretty phenomenal, and she was at Square, and she was also at Salesforce too. So she's definitely got a lot of experience under her belt, and Nextdoor is a very interesting name right now to me. So I've been kind of just diving into that to see if there's anything interesting enough to move on it right now. With a lot of these retail IPOs, it's been kind of funny, like On and Allbirds. The valuations are insane. I mean, the valuations are pretty high. Granted, they're growing, but I think that still it's just funny because IPOs are kind of you never know what you're going to get, if it's going to do well or not. And these names, the market seems to be pretty excited about them. So I've been just kind of diving into that and catching up. I've been taking some profits in my portfolio. I think that with the market at all-time highs, a lot of names I kind of have been having an eye on to take profits out, because as many people know, I'm very interested right now in Pinterest. Pinterest is one that I've been doing a lot of research on. I've written about it on my Substack. I've tweeted about it a ton. And it's just a name that I think the market may not be paying attention to what they're trying to do for, the future and going forward. So really been spending a lot of time on that because I've been wanting to make it a nice core position. So that's kind of what
Sweet.
I've been up to. Yeah.
Had a big win today on New Relic, which was another great situation where, we kind of bought when everyone hated it.
What's the ticker?
NEWR. It's been a nice double since we bought it in the spring, but that one up, I think around 35% today on the earnings results, finally showed a nice acceleration in revenue growth. So wanted to call that one out, because that's the kind of thing, again, like you do the work when everybody else is kind of not interested in it. And what I saw was an opportunity here for a turnaround play. They had a new CEO. The CEO had a really interesting incentive package that incentivized higher share prices and for them to, have a successful turnaround. Software business, so, high margin. And the story there is they finally got revenue growth accelerated again. And now today it's about a double from where we bought it in the spring. So love those kind of plays. But the hard part, and one thing that I've had to, talk through in the community a bit, especially this year over the summer, is that, it's actually likely that I don't catch the bottom on some of these things, especially on turnaround plays. And so it can be a little bit painful to go through a drawdown of 20 or 30%, or maybe even sometimes a little deeper than that on some of these stocks. And, there's a lot of momentum in the market. So you see with, stocks like AMD, which we own, and, of course, Tesla and NVIDIA and stocks like that, when you catch the upside momentum, it kind of continues to chug along almost irregardless of valuation. But on the downside, that can also happen. It's like if a company misses, maybe that's Peloton right now. the market will hate it for a while. But, if there's something there, if the turnaround you think will ultimately be successful, or they'll capture the long-term opportunity, the upside could be massive. But having to go through a 20 to 30% drawdown before that happens is really painful for a lot of people. So, I think that is kind of like one of those things that if you're going to be hunting a longer term, 3, 5, 10x, do you have the stomach to go through a 20, 30, 40% drawdown is something you have to ask yourself, because a lot of times that's what you have to go through first before you get that reward, that payoff.
Yep.
So, and I think obviously there's different strategies, right? Like your style is more to play breakouts. And I think you can do that in stocks as well. People have been doing that on Tesla for the last 3 months. But if you're going to be more of a contrarian player and hunting in spaces that are less trafficked, like I do, and like Nikki does as well, you've got to be willing to sit through the drawdowns. Pinterest being a prime example, by the way, because you look shorter term and it's like, yeah, results maybe don't look great in the short run. PayPal decided not to acquire Pinterest. That news hit the stocks traded down. But on a longer term basis, if you believe in what they're doing with the shift to video, with the shift to AR, and if that pays off, if those bets pay off in 2 or 3 years, you could be looking at a stock that's multiples of the value that it trades at today. So
another good example of that for me was Abercrombie and Fitch. That was kind of I had to sit through a drawdown on that one too. And the market sentiment was really bad on it. Everyone hated it. And now it's about to break out, to multi-year highs. And so that it's just,
you were buying down here in the long-term support range, right?
I was buying pretty much, the long-term support range and kind of on the way down through the pandemic. And even before then I was buying. So I've been kind of scaling in on the way down. And as the stock got lower and lower and more and more hated, I was like, okay, I'm buying more. And then, you end up sitting through drawdowns though, and then the market catches on eventually. Sometimes not. And you've got a stinker, right? But
it's like
but
that.
Yeah, that's it.
Oh, sorry. It's like that old axiom, like to get really wealthy, you have to have a lot of conviction in something that people either hate or haven't figured out yet. And you have to be right? Like that for me, that was Bitcoin. And for you guys, you've had dozens of plays like that, right? Where you're taking a longer term view, you're doing the work, you're creating a thesis. And if it works out, you make really big gains on it, right?
Yep. I'll give the audience a couple here, a couple of freebies of ones that we're still in that I think are fitting that mold too. Like Dropbox is a great example. We've talked about it a few times on the pod, but that's one where it sold off 10% last week on an earnings result that was better than expectations. I think they beat earnings expectations something like 10 or 12 quarters in a row. Stock gets no love. It trades for a very, very reasonable valuation. I think it trades for like 14 or 15 times free cash flow in a market that's way expensive and overbought. And, the company's buying back stock, continues to grow, maybe not at a high rate, but grows, anywhere from 8 to 12% a quarter, beats earnings estimates every time, buying back stock, et cetera. And that's when I think, $40+ stock potentially traded off 10% after earnings last week. Just sort of one of those that can be a little frustrating at times, but I think longer term, the direction's still headed up. I think, we mentioned Pinterest. There's one that I'm going to do a write-up on that trades in Australia. And I think it's a pretty interesting one. And we'll have to talk about it on the podcast after I do the write-up, hopefully this week. But, that's one that's been a little frustrating because we're in a pretty steep drawdown. But I think if you look at the facts behind the business, it's got an incredibly compelling story to be a potential multi-bagger in a pretty hot space. So stay tuned on that. But that's, I think, a pretty compelling one. And then if I had to pick one other, Nick, you're in a
Poshmark.
Yeah.
Maybe.
Yeah. Poshmark's interesting. It's got, $7 to $8 of net cash on the balance sheet. The stock's trading for 24. So, 1/3 of the market cap is in cash. It's a broken IPO. It's in a space that is kind of overlooked. Yeah. But there could be a story there, right? There could be a story with the whole movement to secondhand clothing and people using this marketplace that Poshmark provides to, buy and sell used clothing rather than, having to buy new clothes and just churning new clothes out and having all that clothing waste, right? And then also you have supply chain issues potentially cramping the supply of new apparel. So you could have a story there developing of the role that Poshmark is playing, both short-term and long-term, in helping people to make more efficient use of apparel. And, they've had pretty consistent high rankings in the app stores in the apparel segment. So it's like, they're definitely continuing to grow and build their customer base. And yet the valuation, I think, is a single digit multiple of forward earnings. And it's a marketplace business that should benefit if there's a big inflationary environment. So there's a lot to like there. Maybe not the sexiest business, but it's interesting because it's sort of left for dead after their IPO. But yeah, stay tuned.
Stuff we like. We like to look for that kind of stuff. So
Yeah.
Well,
all right.
Why don't I throw on my cool guy glasses and we will get into some Q&A. What do you think? Got a lot of questions coming in.
Do it.
Awesome. All right, let's pull up the Twitter. I basically tweeted a little bit ago and said, hey guys, we're ramping up for season 2. What kind of stuff do you want to see us talk about? And I've got some good questions or ideas in here. We've got everything from inflation and money printing to crypto, Twitter stuff. Actually, I see one that I want to answer real quick. M. Bamsey asked, how do you navigate the general crypto Twitter perception of specific crypto projects, example, EOS and Sol, and the cult communities to make predictions about the future success probability? Whoa, that's a great question. So another way, I guess, to say this is like, how do you look at the communities that are behind certain projects and make predictions if they're going to succeed or not, right? The way that I think about crypto projects in general is the same way that I think about any other tech startup. Is most of them are likely to fail over time. But the benefit to crypto in the short term is that, let me turn this off. This looks kind of ridiculous.
Yeah, you look a little ridiculous.
Yeah. But the benefit to crypto is like, instead of doing like an angel investment and having to wait 7 to 10 years to figure out if it's going to be a winner or not, crypto is a lot faster. You get liquidity very quickly. Like, so if you find a project like EOS or Solana or whatever, and it starts trading on exchanges, you can use the chart and you can use some of the fundamental and market sentiment gauges to kind of figure out in real time what the probabilities of future success are. So you don't have to lose or risk 100% of your investment, either 100x or 1000x or 0. Like, you can manage risk a little bit better because it gets listed on exchanges quicker, right? Where if you invest in a traditional tech startup, you're going to have to wait for it to either get acquired or IPO or have some major liquidity event to be able to pull cash out, right? So that's what I love about it. Now, I whenever I look at these projects, I go in knowing that even if there is a large community behind some of them, a lot of them are going to fail over time, and that's okay, right? You have to account for that. You have to diversify. And, if you really, really believe and you get, sucked up into the belief system of some of these cult coins, yeah, you could do well, but that could also be deadly to your net worth as well. So I tend to kind of step back and look at myself as like an objective, like third party outsider. I don't, beat the drum for any project. You guys know, I mean, I never promote any of these projects. I never say any of these are going to win long-term. I take the I don't know stance. One thing that I do like use as a red flag is if there's a cult leader that is, very hypey and pumpy and, just trying to get people to just buy the coin just for the sake of driving prices higher. Like, you've got to look at what the solution is that they're trying to solve and what the real use case could be. And the reality again is a lot of them will fail. And a lot of people that are die-hard cult members today will hate those projects in the future. So I just encourage people to never get too obsessed or too overly enthusiastic about any particular project. Because again, it could lead to disaster.
Now,
what do you guys think? Any opinions?
What if that cult leader is Elon Musk?
Well, we all know Papa can do no wrong. Oh yeah. I mean, I know you guys have been highly critical of him. What do you think?
I wouldn't say we're highly critical of him. I think it's more so the annoyance that Tesla's stock has just done what it's done. It's just crazy. It's just crazy. It's just crazy.
Yeah.
Yeah. I would say all the product delay, the thing that was frustrating to me was that the stock was gaining such a cult following and a massive valuation while the company was, not necessarily hitting all their milestones and testing autopilot on the roads and seems very unsafe. But, look, I mean, at the end of the day, I've been sitting out Tesla and lots of other people have made a lot of money on the stock. So, I'm kind of wrong on that. And I'm happy to admit it. And I think, people have differing opinions on Elon. He's kind of like almost like a Trump figure in some ways. Like he's you either love him or you hate him. And I think probably there's more people that love him than hate him. And I think at the end of the day, like I was thinking about this the other day, I was like, if he was playing the fake it till you make it game for the first few years of Tesla and maybe even playing accounting games and, maybe shit posting on Twitter, but if ultimately, that led to this adoption of electric vehicles and ultimately it helps fund, space exploration, maybe that's a cost we're willing to bear. And I think even if you maybe don't like the guy and you think he's a little bit childish sometimes and you think he changes his mind a lot, which I do, obviously, ultimately, I think there are probably worse and more evil people out there. And so I have to acknowledge he's doing a lot of good for the world. So good for him, good for Tesla. I think at some point the valuation catches up with reality, but that might be 5-10 years down the line. So who knows?
Yeah, markets can stay irrational way longer than it seems reasonable, right?
Yeah.
All right, let's take a look at another question. So this is an interesting one. Is money printing actually healthy for the economy? How does manipulation of monetary base affect population mental health? I don't know. That could be like an hour-long conversation. Does anybody, either one of you guys, have like a 30-second answer for that, or like a snippet or a 30,000-foot overview?
I mean, look, I've always said that money printing plays a role in that it can be utilized at the right times to prevent a deflationary spiral in economies. And so I always looked at it as a tool that could be used to keep the economy from going into depression. Now, it's also been used to prop up asset prices, and it makes, wealth inequality worse. And we're starting to see with the aggressive fiscal spending, the potential for it to really create nasty inflation. And, that can also have destabilizing effects on an economy. So, while it can be used as a tool for good, I think we've been heading in the direction where it's almost used too aggressively and can be a tool that actually hurts the economy. So, I think it can play a role. The money supply should grow if your population is growing. I think people that are on a hard money idea standard, gold standard type of idealism, maybe ignore the fact that can often lead to very frequent recessions and depressions, which is also not good for society. So it's a complicated answer. I would say, I've always looked at it as a tool that has the potential for abuse, and we're probably in a world where it's being abused more. So it's not good. And I think, I think a lot of people also have started to wake up to this idea that the money printing in recent years has led to this wealth inequality issue. We have some of the highest, wealth inequality in the United States, for instance. And it's like, maybe instead of buying, real estate securities and government bonds, the Fed could be, not buying assets and driving up asset prices, and the fiscal spending could be directed more towards individuals and not towards pork projects, right? I mean, I think the way that these things are implemented are just suboptimal, and we've got to move towards a world where we figure that out.
So buy Bitcoin. Okay, cool. No, great answer, man. I like that we have nuanced opinions, right? Like some of the Bitcoin people, they'll hear you say that and say, well, the Bitcoin standard, right? And, I tend to lean in that camp too, but it's always interesting to think about things from both sides. And again, like, don't just be dogmatic or, tribal in your thinking, like be open, right? That's how you find new opportunities and also hedge against risk.
I am very optimistic about the role that crypto can play in fixing the system over a longer period of time. I don't know whether that's, a Bitcoin standard or something else. I've talked in the past about the potential to encode monetary policy on a blockchain to where it's not left up to a board of 8 or 10 people, right? And it's not left up to the whims of politicians in voting. So, or maybe it is voting, but it's in a different, it's a more democratized voting system, right? So there's a lot that could be done, I think, from a blockchain perspective, from a maybe automated policy rules, maybe other ideas that crypto can play a massive role in the next couple of decades that I'm actually excited about. So let's hope. Let's hope. Yeah.
Nikki, you were going to say something?
Yeah, I was going to kind of just not challenge Trav, but ask him, because he made a really great point that he'd like to see maybe the fiscal side be a little bit more properly allocated, right? And you can kind of see over the past year and a half or however long it's been, time has flown, that the government really did put a lot of money in the hands of the individual. This is really kind of the first time we've seen that kind of fiscal spending, right? And we have seen debt levels decline. We have seen savings rates kind of elevate. They're starting to come in a little bit, but we're still seeing elevated savings rates. Like, so I guess this what do you call it? A simulation or whatever we're in, of seeing the government put more money in the hands of the individual, even though there is still wealth inequality and asset prices have gone up a lot more. I still feel like the consumer kind of did get a little bit better off with the way things happened.
Yeah.
So
I think you are spot on, because if you look at the way that money printing went directly into really only asset price increases in 2008, 2009, or, post the great financial crisis, that was way worse than what we saw during COVID, where, like you said, the government finally figured out we're going to actually give money directly to people. And that helped repair consumer balance sheets. That helped the economy actually get out of a terrible funk pretty quickly. And so I think this time around, you're right. It definitely did. That experiment actually looked like it was helpful and worked for a lot of people. I think where it started to go wrong again, though, is that we're already now veering into these massive 3 trillion spending packages. It's like, the government looked at what happened during COVID and said, oh, okay, we can actually print a lot of money at one time, and we can give money to people, and it can actually help the economy. And then now they've taken that data set and suddenly decided that then it's fine to spend $3.5 trillion on some infrastructure package or some, climate bill that has a lot of weird stuff in it, a lot of weird incentives. I mean, you're going to give people $12,000 to go buy EVs. It doesn't look like to me that there's any shortage of demand for EVs right now. You're going to go have all of these pork spending projects from, look, I think infrastructure needs to be repaired. That's fine. But when you start to look at some of the stuff that was in that climate bill, really questionable, what we're going to incentivize with $3.5 trillion worth of capital. So I think it starts to make me a little wary when you have government starting to direct massive amounts of money to, pet projects, essentially.
Yeah, I think.
Yeah, look,
I think
no politician
right
wants to be the guy or lady that stops spending, right? Like, spending is almost a disease at the federal level. And when you have people that start doing it, it's really hard to slow down, let alone stop.
Yeah, I think that the government needs to be careful here and tread a little more lightly instead of just bazooking all over the place. Because, we had this unprecedented event and this unprecedented amount of money printing, fiscal spending. But that doesn't mean that we can sustain that for, we don't know for sure.
Yeah, and you've got a shortage, now we're looking at a shortage of labor, a shortage of, semiconductors, problems in the supply chain and shipping lines and obviously ports. And now you want to pour gas on that fire. It's a different analysis to do money printing in an environment of deflation, but now we're in an environment of escalating inflation. And so I think it's kind of a scary thing to try to throw $3-4 trillion on top of that. But maybe I'm wrong on that. We'll see. It's going to be a fun experiment. We'll see.
Yep. We will keep our eye on that over the next few weeks and months. Let's jump into a few more questions and then we'll start to wrap it up. Stonk Rates was asking, I'd like to hear your thoughts on the potential for Bitcoin spot ETF, how it changed things versus the futures ETFs. Will all the institutions pile in? Nick, I wanted to kind of see if you had an opinion on this from the CFP side, but we've pulled up several times in the show the gold chart from the early 2000s and talked about how that was really a spur for capital flow. Back here in the early 2000s when gold was trading for $200 or $300, that was the catalyst. The ETFs are the catalyst to drive that higher. Do you have an opinion on that from I guess just the spot versus future side, or not really?
Yeah, no, I do. I think a lot of people were really excited about the futures ETF, but it was kind of a hold your horses moment because a futures ETF is going to function differently than a spot ETF that's going to actually, hold Bitcoin. And Trav, you can probably speak a little bit in more detail on what those differences are. But with the futures ETF, it's a good step in the right direction, but really what we want, especially financial planners specifically, is a spot ETF, because we want to actually have the ETF being backed by the Bitcoin. So instead of it just being a futures contract, essentially. So I think that people do need to educate themselves on the differences between the two. And definitely once that spot ETF comes out and gets approved, we are going to see probably an explosion of inflows into those things. I mean, I know advisors are really excited about them, the ones that are actually crypto forward. I know that many people want exposure in their IRA and they don't want to deal with going to a self-directed IRA. I think it's I Trust Capital or something like that. They're charging, 1% for a transaction fee for Bitcoin. And, that can add up. So we definitely want something that's economical, easy, and accessible.
Absolutely. All right. Next question. Let's see. We got a few about how to determine market tops. There's a quick one here. CoinFather is asking, could you shed some light on market cap and why it's such an important indicator to look out for? Yeah. I mean, just very simply, market cap is the total value of all the coins or stock or whatever the asset is in available today. And one thing that in crypto you got to watch out for is it's easy to manipulate your market cap. You can have a really, really low volume coin that has a massive market cap. I've kind of excluded a lot of the shit coins from this list, but you'll have some that'll show like a 10, 20, 30, $50 billion market cap. And they trade real volume, like less than, 10, 20, $30 million a day, where you can see some of the larger cap ones here where you're pushing 50 to half a trillion. They're trading several $billion a day. So in crypto, I actually pay more attention on a day-to-day basis to the actual trading volume, how liquid that coin is. And then market cap matters, but again, it's easily manipulated. And when people throw out these pie in the sky profit targets where they're like, oh, Ripple to $300, and you do the math, it's like, oh, that would be more than the US economy. Or, Nikki, I know you did a video, what was it? A TikTok reaction video where people were talking about like GME or AMC to 100,000, right? And you did the math and you're like, that'd be like trillions of dollars or something, right?
Yeah.
So, so it matters, right? But just know that in crypto, market cap is an easily manipulatable metric.
The same thing in stocks too. So people often focus, newbies in stocks will look at price per share. So they'll look at a stock and go, oh, that's a $3 stock, or, oh, that's a $1,000 stock. But the $1,000 stock could actually have a lower market cap or lower total market value than the $3 stock, because the $3 stock could have way more shares outstanding. So if you have 1 billion shares outstanding, but a $3 share price, you're looking at $3 billion market cap. You could have $100 share price with only, 1 million shares out. And so you have $100 million market cap. So market cap essentially in stocks is basically, the price per share times the total number of shares outstanding. And that's market cap is a way more accurate assessment of what a company is being valued at in the market than the price per share. Again, a company can choose to list at whatever price per share they want. And then you have to figure out what the market cap or market value is of the company by multiplying by the total number of shares outstanding. So it's a much better metric than just looking at price per share, which a lot of newbies don't get right off the bat.
Yeah. And in crypto too, people go hunting for, coins that are a fraction of a penny, just so they feel that wealth effect, right? Same with like penny stocks, but like, I can own 1 billion Shiba coins or whatever, right? And like feel like you're wealthy, but really the physician side is like a few $100 or something. All right. Final question. I've seen several questions that are alluding to this, which is basically, how do you know when the market is topping out, or what are signs of a reversal? Obviously the markets have been crushing it for the past year or two or more. And when we are in a risk on environment, how do you know when to get out before the rug gets pulled or everybody rushes for the exit? And that is literally the magic question that's really hard to answer, but I think we all have different ways of approaching that. And maybe we can each give our answer and then we'll wrap it up. Nick, why don't you start?
Yeah. So yeah, obviously we don't ever know exactly where the top is going to be. But what I usually do is I use technical analysis to kind of see if price action, literally the candlesticks, how are the candlesticks looking? How far are the moves in relation to prior runs that have happened before? Like that you can just eyeball that and say, oh yeah, this is run, double what the prior big run was. I know, Chris, you're a fan of doing that, measured moves, quote unquote. And then taking into account with the technicals, I look at the fundamentals and say, okay, is this value too much? Is it overvalued, or is there still room for this to run in terms of valuation? Parabolic price action is really important to learn how to recognize. I think we're seeing, I don't know, between Tesla and Nvidia and AMD, you can kind of peek at those charts and say, you know what? Yeah, these runs happened really far and really fast. That's the other thing, is timing. How fast did a certain asset run a certain percentage amount, and is that abnormal? So you can kind of get a feel for the candlesticks, AKA the price action, the measured moves, how far the move has actually gone in relation to prior moves. And then use that along with fundamental analysis, which you can do in crypto and kind of, I assume you can do in crypto and kind of compare some on-chain data to kind of see where things are at and if there's potentially more room.
Yep. So a combination of fundamentals and technicals. Trav, how do you nail the exact top in all of your positions?
I don't think I'm the person to ask. Every time I put on hedges, the market seems to go against me lately. But I mean, you can often feel the sentiment, in the market when you look at the type of price moves we're getting. Like, I mean, just last week and early this week, I could see it with the big cap tech. I don't think I'd ever seen, and we could run some historical data studies on large cap tech stocks and what the typical moves, and we're probably looking at like 3 to 4 standard deviation moves in large cap tech stocks over the last couple of weeks. And so those types of things can lead you to to know that, you're in a kind of extraordinary environment if you're using data to kind of look at the average move versus what you're seeing. But also, just like I said, feeling out the sentiment. You can look at how stocks are moving on a day-to-day basis, how much the market is up. Typically, historically, the stock market's not going to deliver 25% annual returns year after year after year. And we're now coming off 2 years of 20% plus returns in the indices. So, you could probably use that as a gauge to say, well, it's very unlikely we're going to see another year like that next year. So those types of things, when the New York Times starts publishing articles again about how everybody's getting rich and you aren't, typically that's a good sign.
Yep.
And so I think, I also like to look at like the rate of change in economic data. So I will try to look at kind of overall macroeconomic fundamentals to see, what's happening with the rate of change in GDP or in unemployment, if that starts to slow down, things like that, but it's really hard to call tops in any kind of market or even in individual securities. So that's why we often try to hedge ourselves a little bit by taking profits along the way up and leaving runners to try to catch the top of the parabola. But it's almost, you can't beat yourself up for not hitting an exact top on these types of things.
Yep. Well said. And let's see. So Nikki, you were talking about measured moves, and parabolas, and Travis talking about, looking at economic data and kind of tying all that together. In crypto, for anybody that's only crypto or crypto focused right now, there's three things, right? You have your technicals, you have your fundamentals, which could be on-chain data. I did a video series on YouTube talking about that. You can watch, and also market sentiment. And one thing I'll say though, is like a market top, like you could see on Ethereum back here in May, Ethereum had a market top, right? It went parabolic. Things got overextended. I sold part of my position very close to the top, which in May, I look like a genius because I nailed the top, right? And there was a very, very deep pullback of about 60, 65%. But just because you have a market top today or 6 months ago doesn't mean that that has to be the top forever, right? Like markets can have intermediate tops and then recover and move higher into the future, just like we saw with Ethereum today, right? So also keep that in mind because you'll have markets that will get overheated. It could be the stock, individual stock. It could be a stock index, could be crypto, could be gold, whatever. It could be housing prices, could be car prices, which have been going up recently, could be lumber prices, which we saw a boom and bust. But anytime you see a market top, doesn't mean that that has to be the market top forever, right? Markets can recover and far exceed what looks like a market top today. So I try to keep that in mind too when I'm trading waves. Like, you can buy and sell and make great moves and great profits on medium-sized moves. But over time, if there's larger waves, you could dwarf, like future trends could dwarf what you just traded. So that's why I like to split it up and have like a HODL capital bucket where I keep, a portion of my wealth and these assets forever. And I don't think about it. And then I try to get alpha and I try to increase my gains by being a little more tactical and active. Right. But when it comes to picking tops, it's damn hard. Trying to short into tops is even harder and more risky. And that's why I think we've said this probably 872 times on the show. We scale out, right? We don't try to guess when it's the top because you never really know.
Another thing that you can do if you really want to zoom in on the technicals, you can sort of put a mental stop in your mind. Like I know if you pull up like the Tesla chart, for example, that's a great one to go over because this just recently happened. And it even has happened in Ethereum over the past week or so, but you can put kind of a mental stop behind each high each low of the candlesticks. You can see the low of the day never got taken out on that run until what, yesterday or the day before yesterday. So, you can kind of put those mental stops in and let price run and know that, okay, if we break below the prior day low, then this trend might be shifting. And that's just an exercise you can kind of maybe practice on, do some back testing, look at prior charts, prior runs, look at the Trump run, whatever that SPAC was. You could look at that. you could study these parabolic runs and kind of get a feel for what price is doing. And just, like Trav has said, you're never going to be perfect with this stuff, but you can kind of use tools like that to kind of gauge and to kind of gauge when price is slowing down, essentially.
Yep.
If that makes sense.
Yeah.
Well said. Well said. Well, we've been going for a while, so I guess we can go ahead and wrap it up there. But it's good to be back on the show with you guys.
We didn't even get
Trav
to
just
talk
entered
about
the metaverse.
I'm just gonna hang out in the metaverse for the rest of the day.
Cool. Hang on. I'm gonna come join you. Where'd it go? Okay, there we go. Yeah, guys. If you need us, we will be floating around the digital space with Zuck. Nick, stay in the real world. Don't get into this craziness. Oh man, it's good to be back. It's good to be back. I know a lot of people have been asking where the hell we've been, and we've just been living in the real world, but now we're back in the digital world. And I think it's good to mix it up every now and then and take some digital profits and put it in the physical world. I've heard from a lot of you guys that have been buying houses and, basically like life improvement assets outside of Bitcoin and other, stocks and crypto in general. And I think that's great. I mean, that's why we're doing this, right? Is to improve the quality of our lives. Who gives a shit if you have the biggest Bitcoin wallet in the world, if you're living like, a rat in a hole, yeah. So hopefully you guys are enjoying life, living well, having fun, learning lots, making gains. Yeah. I don't know.
We're
Thanks
back,
to Y
baby.
Charts for sponsoring the show. And hey, whoa, where'd you go?
He's not in the metaverse anymore.
Okay, I'm out. Cool. All right.
I'm excited. I'm excited
to
be back in the game with you guys. I missed We Talk Money. It's always fun just talking shop with you guys and having great questions to be able to talk through.
Absolutely.
Yep.
Everybody, make sure you send us your questions. Go to wetalkmoney.com. Send us your questions for the show. We'll probably put out another tweet next time. Get more questions coming in. Yeah.
There's a bunch that we didn't get to today that we'll use for future shows. But go ahead and subscribe to the YouTube channel and the iTunes podcast. Go to wetalkmoney.com. You can get on the email list so you don't miss any future episodes. And we'll have better internet and an awesome studio here in the near future. Take care, guys.
Absolutely.
We will see you next time.